Call the May 15th meeting of the Budget Advisory Committee to order. Can we have a roll call, please?
Mr. Bergman?
Here.
Ms. Hall?
Here.
Ms. Hales?
Here.
Ms. McKinney is a new member. I'm not sure if she will be able to make it today. And Mr. Smarkets.
Here.
Before we get into old business, I want to welcome the new member.
Thank you very much.
Okay, old business. The Mayor and Commissioner Salary Survey.
Yes, Chairman and members, and Ron Herring, Finance Director, but Mr. Marcus too, and Mr. Puzan. But if you do have any questions, my door's always open. I know it's, you're probably gonna wonder, what are all these funds and account numbers and all this stuff? How does it work? I'm over, my door's open. In fact, I had a presentation to members a few years ago that tried to go over this stuff. Maybe it'll help. Getting back to the salary survey, the board at the last meeting requested that we have a salary survey, and we updated it. This is just numerically from the lowest to the highest salaries for the mayors and commissioners in the county, going from Safe Harbor $6,000 per mayor, commissioners $4,800. Going down to St. Petersburg, which is $169,000 for the mayor, which is the mayor of government. And the commissioners get $46,000. Graphically, I put this presentation together. My presented in a different fashion. This goes graphically from the lowest on the left to the highest on the right. I didn't include Clearwater because with them in the graph. Oh, thank you. Went way up high, so I just included the Safety Harbor through the Clearwater, and as you can see, Tarpon Springs is in that little box that's outlined in the orange color right there. The mayor's salary has been the same for, I think, 20-some years. It hasn't changed, and the same with commissioners, and with that, I'll leave it for y'all.
Questions, observations?
Any idea why Seminole has an odd amount? Do they tie it to something?
Yeah, some of them have tied it to the CPI index. And I think Dunedin is going to do that too. I texted the finance director down there earlier to confirm, but I haven't heard back, but I'm pretty sure Dunedin is always going to index it with the CPI index or whatever their other pay their employees are getting.
Well, we generally compare ourselves to Dunedin, even though we are smaller, a smaller budget too, I think, right?
Yes.
My first inclination is to raise the commissioners to maybe 10. But we have a larger gap, I think, than most between the commissioner and mayor. And I really don't think there should be that big of a gap since they all have equal votes. The mayor drives the agenda, maybe is the biggest difference in ours. That's my initial thoughts.
Kathy, any thoughts?
So the purpose we're looking at this is to consider a potential increase for both the mayor and the commissioners. Is that kind of the context that we're?
I believe, yes.
And how much larger is Dunedin than Tarpon? The budget for Dunedin, just approximately?
Percentage-wise.
I would say probably 35%.
35%?
Yeah, I was going to say it's not quite 50%, but probably 30% is good.
And our payment scale isn't tied to anything like CPI, right?
For employees or?
Yeah, or for commissioners and mayor?
No,
we don't tie it to anything,
It's
right?
been the same amount for 20 plus years.
For 20 years, wow. Okay, so it's just a question of what amount increase maybe we might recommend. And have you looked at, you don't have any recommendation here based on your comparison. This is the only analysis you did, right?
Just analysis to update it.
Okay. Okay. I'm just gonna look at the numbers for a second.
I have here. Graph.
Oh, do you? I didn't print it out. I don't know. I think it makes sense to have an increase, there's an incentive to do it. It's just a question of how do we want to, suggest.
Do we wanna
what
tie it
framework
to
do we-
anything?
Yeah,
Yeah.
exactly.
I think part of it was to try to, it was been mentioned, getting more people to work on the board.
Right, exactly.
They thought, well, maybe if we pay them some more money, we might get more people that want to
Yeah,
run for the,
incentive.
for the board positions.
Because they would get this payment plus they get insurance, right?
Yes.
Okay, so that's pretty good.
And most of them do. On that previous slide, it does list the benefits that the different cities provide on the far right there.
And does that extend to family coverage as well?
Might have, no,
No, it's just the individual.
yeah, just see them, yes.
Okay, last question. So Dunedin, we usually compare ourselves to Dunedin. Dunedin's a little larger.
I think their budget's probably 35% more than ours, on a revenue basis. They're bigger square miles too, but
Bigger square miles. And then Dunedin's tied to the CPI, you said?
Yes.
So if,
or will be.
There will be.
they
will be.
will
They're
be.
not right now.
So they may increase from
Yes.
here. Okay. And we don't have any insight as to what they're considering for their increase.
No, I just reached out to the finance director this morning, but I haven't heard back yet.
Okay. I was almost thinking like, what if we try to get more closer to the Dunedin numbers, but I'm wondering if that's gonna even be sufficient with their increase.
You know, if you want to, I'm just throwing in something. By the next meeting, I could try to find out, you know, if you're looking at the revenue, how much the increase is in revenues, see if they have the increase, I could provide some more information for you. If you're sort of honing in on Dunedin there.
What does everybody else think?
If I made a recommendation today, I would take the commissioners to 10,000. I don't know that I would change the mayor,
Okay,
because I don't like I said, I don't like the gap right now we have between mayor and commissioners.
What about going forward? Do we want to consider the CPI index or not?
I'm not inclined to do that. I'm just inclined to let this committee evaluate it on an annual basis.
Do we have some idea as to what amount of time a commissioner puts in for the city?
Well,
I'm sure they probably say a lot of time.
Well,
the requirement is 2 meetings a month, right?
Yes,
Yeah,
and
there's
special
two-
meetings.
Well, then they probably will talk about every little special
Right,
things. they have
ribbon
to go out-
cuttings,
Ribbon cuttings and,
Which is
Phone
not a
calls.
and then
requirement.
if they have to stay
right,
late,
but I
sometimes.
mean, you know, 10 hours, 6 hours, 12 hours, rough round figures between meetings and,
When I've estimated it, I've estimated 600 hours a year, I would say.
So do you want
so
Ron,
50 hours a
additional
month.
information for the next meeting? Or we make a decision?
Unless you two are ready to make a decision now on the 10, I think, well, let me ask that question. Are you ready to decide on the 10 at this moment?
If we don't want to postpone for additional information, I'm open to a motion being made right now, yes.
Okay. Okay, so let's just look at this real quick, so.
So we're fixated on comparing with Dunedin, that's 30% larger, or any of these townships more close to us? Seminole,
well, like I say,
Or-
like Seminole's a lot smaller than us, but they're fairly not too far behind us. Well, in fact, the commissioners make more than the,
but, right, but just size-wise and kind of budget-wise, I'm kind of new to this,
Right.
so looking at these things and having grown up here, I look at, you know, little places and big places, but I know Gulfport's not that big, but they sure have, you know, a lot more value than we have, so you can't really compare that.
they're a smaller size, smaller revenue than Tarpon Springs.
But, you know, overall, it's a higher value area, therefore, I don't think their budget, you know, is a comp for us, what I mean. I'm just trying to figure out, and I don't, you know, being relatively new, 5 or 10 minutes. I'm just trying to get a better idea of what we're actually comparing with.
After 10 minutes, you're a veteran. No.
20 is when I resigned.
Well, I see the difference you're talking about in the numbers for Seminole, but if you look at, under the comments, they don't have any benefits where ours
Right.
has the insurance and stuff.
Right, right. And I mean, that has a lot of value. Like, if
Yeah.
it was me, that, all that insurance stuff is what increases in cost every year and has increased in cost every year for 20 years. And now granted, it's probably offset by, you know, the $8,000 going down in value over the last 20 years, but it balances out in my mind, depending on, and I'm not overly familiar with what all the commissioners do all the time, but, you know, if it's 10 hours or 12 hours a month, that's $50, $60, $70 an hour, depending on what they're doing, which that's relatively reasonable with benefits. You know, at least in my mind. But that's where I'm trying to get a better idea of, you know, how much time is it exactly?
I think that's unique to each commissioner.
Right, right, and
But if
again.
you just go with requirement, that's the 2 meetings a month plus the special sessions and such.
And sometimes it ends up being real late at night too, like 10, 11.
Yeah.
Sometimes, yeah.
But that should give them incentive to cut to the chase.
Okay, so what if we did something where, I mean, I could make a motion that we maybe increase the commissioners to 10, but then also maybe next meeting get an update on Dunedin, just so that we can see, and this would just be a recommendation from us, I
Yeah,
believe,
or
right?
we can wait, because we're meeting pretty soon because of
We're
budget,
meeting
so
next week.
we can wait.
Okay,
Oh, we are?
Yeah,
This is budget season, we meet more frequently.
All right,
so we
They
can,
didn't tell you that, did they?
come with the application.
I did put a sheet of the
Yeah.
times.
yeah,
Behind his laptop, there's a schedule for upcoming meetings.
so we can defer it till next meeting and just have it as the first item before we get to budget review, if you want to wait for some information from Dunedin.
Probably be okay with me.
Did you want to, I mean, the commissioners might all vary if I try to reach out to some to see how many hours they may say they spend in a month?
That'd be an interesting survey, yes.
yeah, maybe just another data point or two, if it doesn't take too much time, too much of your time.
So then we're agreement, we table this to further discussion at the next meeting.
Yep.
Okay, let's move on to new business. Let me, by way of introduction, I attended the Board of Commissioners meeting on April 22nd, in which the representative of our external audit firm made a presentation on the results of the audit, so I've asked Ron to sort of go over that for the benefit of the rest of this committee.
Yes, hi. And as you probably know, except maybe Mr. Smarkles, we are required to have an external independent audit by state statutes performed on the finances every year. Malden Jenkins is our current external auditor. This was our 5th year of doing the audit. I wasn't sure exactly, Chairman, what exactly, so I took their presentation, thought I would use that same one, make some comments on it, and I added a slide at the very end just to try to, maybe some high-level numbers on net income and fund balances. Let me go. This was just their intro here. Malden Jenkins, they do mostly all governmental clients, cities and counties in the southeast here. They're a decent size, middle-sized firm, but they're well recognized. They're a good auditing firm doing well recognized and respected in our governmental clients and cities here. Like I say, their firm is in the top 20 of all firms in doing the audits. Just some more information on Malden Jenkins. The audit book, which is this here, all 100 pages of it. This is, it contains their audit opinions, but all the financial statements within the audit report there. They're broken out between the introductory section, the financial section, and the statistical section. Their audit opinion one of the big main items on page B1 of the report is the audit opinion, which is basically, I just want to highlight it there just so you'll know, the basic financial statements are responsibility of the city's management. The finance department puts this whole book together, then the auditors verify all the numbers in there, and then they give us their audit opinion reports. We had a clean opinion. They didn't find anything, which is, good, knock on wood. Very proud of the finance department. We've got a good staff back there. They've been there a long time. They do a good job of checking everything and making sure that everything, that we're following the policies that we've established in the finance department. They also look into compliance and internal controls. That is another separate report. Page B1 is towards the front. The reports go A1, B1, they go in these different sections, but F, the compliance report is page F2 towards the end, and this is where they put the report on compliance and internal controls. And as it says there were no findings in the current year report, which is good. And then they do work on the single audit. What single audits are, if a government has more than $750,000 in federal and or state grants, they have to do what's called a single audit. What they do is that whatever grant was over that amount, the $750,000, they have to do more research into that grant. They ask for more expenditures. They ask for all the detail into the grant. So that is the single audits. The audits, all the audits can be found on page F1 of the audit book. Go to the next page. And there's the management letter, and this is also towards the back of the book, page F9. The Auditor General of Florida requires that they look into and report on various things within the audit report. So they went through it. It's in the page F9 on the audit report. It's called the management letter, and they had no issues with that. And then the last one there, the examination report, is on the investment of public funds. They want to make sure per state statutes of Florida and our investment policy that we are in compliance with both the state statutes and investment policies on our investments. And they said they had no issues with that. Other things they look into is the policies we use, but the policies the city uses are based on our general accepted accounting principles. We follow GASB, which is the Government Accounting Standards Board, which sets all the standards we have to follow. Management judgment and accounting estimates. We use the standard approved accounting estimates for when we do our year-end audit. Relationship with management, as they say, they receive full cooperation from city management, and there were no disagreements with management on any accounting issues. Required communication, whatever they usually ask for, we're make sure we give it to them. We have that consulting with other accountants. We haven't done that. I guess they would think there might be some cities that might reach out to, maybe if I didn't agree with our auditors, I might reach out to somebody else, but no, we don't do that. Audit adjustments, sort of proud here with this one too. There was no audit adjustments, so that means they didn't find anything where they asked us to do a journal entry or an entry that we had to correct. So where there's no audit adjustments. Let's see, other required. I just highlighted there that just so everybody, it's state statutes require that we be audited by an external auditor, CPA firm, just to make sure that they are independent from the city. Let's see, this was summary. Did they have any findings last year? No, so that's why they're just saying they had none last year and there's none this year. That was basically the end of their presentation. I threw in these numbers. I just sort of trying to figure out something that you might want, but just to show that the general fund had a change in fund balance. It's basically like the net income, 84,000 minus in 2024. Total ending fund balance was 14,762,000. Unassigned fund balance was 9,158,000. The general fund has a net income of 706,000, ended up with ending fund balance of 1.8 million. The grants fund, which is mostly the ARPA fund, what's remaining of it, had net income of 383,000, ending fund balance of 775,000. The penny fund, income of $786,000 with almost $8 million of ending fund balance. Those are general government funds. General government funds are basically ones that's sort of a cash basis. Enterprise funds are like business type funds where they're full accrual accounting. So we've got down below, we got the sanitation fund. Net income was 50,000. Ending fund balance for 4.5 million with unrestricted of almost 1.8 million. Water and sewer fund, net income 1.4 million. Total ending fund balance is 75 million. Unrestricted fund balance 5.2 million. Stormwater fund, net income 1 million. Total ending fund balance 9.4 million with unrestricted fund balance of 858,000. Marina fund, very small fund, had a net loss of 22,000, ending fund balance of 26,000, and unrestricted fund balance of 15,000. And then the golf course fund, net income of 809,000. Total ending fund balance 1.7 million with unrestricted fund balance of 883,000. Just part of the audit process, I think I wanted to mention the audit process is a long process. It starts in October. A lot of times in November and December, we're doing all the entries for the audit. And then gradually as we get into January and February, the auditors usually come about mid-February. That's what they did this year. They spend about 2 weeks here, 3-4 people. For 2 weeks, they are asking a lot of questions of staff, and we get them the information as quick as possible and so they can finish their audit. The audit usually continues into March. More or less, they're not here physically, but they're in their home office, usually asking questions from there. But we have to be done with the audit by March 31st, so by state standards. I'm trying to think of anything else informational on the audit, but I think that's it.
Questions, comments?
No, just to confirm, so there was no findings at all? Great, okay, yeah,
That's always good.
that's always good.
Thanks, Ron. Let's move to the next item, the proposed budget overview.
Mr. Smarkles, the budget really, they probably already know, it starts in probably February. We send out the budget request to departments. Departments start keying in their budget in February. We get all that information. In March, we start to compile the budget together. So departments have entered all their budgets, obviously. And then in April, we'll get all their budgets. We'll project the revenues. We'll work with the payroll. We're at the time now, all funds are balanced. The general fund is balanced with no use of unassigned fund balance. That's the unrestricted reserves. 10th straight year we haven't used those reserves. The city manager met with the department heads last week over their budgets. Just some revenue assumptions with them on budgets. Usually when we do the revenues, we look at the historical, what's gone on in the past years. We look at the current year through March. Our fiscal year starts October 1st, so March 31st is the end of our midway through. Property taxes, we had an originally 3% taxable value increase for property taxes. Talking to other finance people, that's what we were doing initially, but then we heard, the county says taxable value increase might only be 0% or -1. So I thought, I reduced the 0% about 2 weeks ago. I mean, from 3% to 0%, about $450,000 we had to cut out. So right now we're at 0% taxable value increase. The millage rate is still at 5.37. And just for reference, every 1% increase in the taxable value is about $150,000 more in revenue. So, but hopefully by the end of May, 1st of June, the county's required to send us what the taxable values is. Now, when they say the county said it was, so far they're thinking it's 0%, but that might be countywide. Tarpon Springs, I'm hoping might be a little above in the positive side, but we'll see. Water and sewer fees, 2.75% rate increase for water and sewer is in the ordinance still. Sanitation fees, the 3% max is in the budget. And stormwater fees, we have no approved increase. but I budgeted for a 5% rate increase. And we're having rate studies done for right now, currently for both stormwater and water and sewer. Expenditure assumptions within the budget, we have pay increases in for the police and fire union employees. So they are in the budget. No general employee increases are in the budget yet. We're waiting on to finalize the pay study that's being worked on. There's no new positions in the budget. We've increased the budget for police and fire pension, the police and fire pension contributions that were required per the actuary. We've estimated health, dental, and life insurance increase at 10%. It's an estimate, along with property liability, workers' comp, and those insurances. We've estimated a 10% increase. Sometimes we don't find the actual increase out until latter part of July or August, what it actually comes to. Getting into some numbers in the budget right now, the way it is, this is the first go around. There's going to be this budget, then there's going to be another budget that goes before the board towards the end of June. So there'll be like 3 or 4 iterations of the budget during the summer until we're finally done in September. So right now, highlighted in yellow, the total city budget is $100,417,934. That's that column on the left there. And then it's the percent of the budget. So like the general fund at 36 million is 36% of the budget. Last year it was 36 million. So there's an increase of 334,000 or 0.9%. And off to the right, I try to put any explanations for the major increases in the budget. Water and sewer fund, 32 million. It's increased about 6.2 million, and that's mostly due to some capital items for water, the wastewater treatment plant electrical processor having worked on, water well improvements, and water meter installation. Sanitation fund is mostly the contract increase of 3% with waste management. Penny fund is all capital projects, so it's just based on whatever capitals we're trying to do that year, so that's why I just call it the capital project allocation. CRA fund is increasing 2.4 million. That's because we have Orange Street construction in there for 990,000, and then we have the CRA master plan improvements about 1.9 million. Stormwater fund, the increase is 100,000, and that's mostly for annual pipelining and a utility truck. And then the golf course fund increased about 4.3 million, but we have in the budget a clubhouse for 4.2 million. So these are the largest funds. I didn't show all the funds, but just the larger funds right there, these 7 of them. So these 7 funds are 93 million, almost 94 million of that $100 million budget. We have 33 funds within the city budget. This is just showing for the total city, the revenues of the total city. The first column is 2025 at 86 million. 2026 totals 100 million, increase of 14 million. That's a 16.6% increase. And down below graphically, just to show the highlighted there, charges for services is the biggest increase at 40.5%. Charges for services is mostly your revenue, water and sewer increases, of stormwater and sanitation. The same numbers from the previous slide, but over to the side, I've tried to explain those same categories, but why the increase is. And highlighted intergovernmental had 2.2 million, but that's mostly because of water and sewer electrical grant. It's a $5 million project that's going for the wastewater treatment plant. The public services director has a $2 million grant. And then the $3 million balance is being subsidized by the city. And there's also a sustainability grant for $400,000. That's what causes that $2.2 million increase in intergovernmental. Charges for services going up 1.5 million, and that's mostly the water and sewer rate increases for charges for services and stormwater and sanitation. And down below, highlighted across from miscellaneous, we got a $3 million increase, and that's mostly, there's something called a PFAS settlement with the water and sewer, about a $3 million settlement. Public services director is using that to improve some of our water wells. That's all I had highlighted there on that. Getting into the total city expenditures, going by personnel, operating capital, again, 2025 to 26, personnel increasing 1.2 million, and that's mostly the police and fire union increases and the health insurance increase of a 10% estimate. Capital outlay going up to almost 12 million, and that's mostly the water and sewer capital items, and the 4.2 million for the golf course clubhouse. And as you notate down below, Personnel is the highest category at 38.1%. Get a little dry throat here. Too many numbers. What I'm trying to show here is that each fund and each department of the fund, here's the general fund. And just listing the departments, what the budget was in 2025 and then the budget in 2026. The dollar change and the percentage change. And the biggest increase is police and fire. And off to the side, I highlighted it's a union wage increase and the pension contributions and the 10% health insurance increase. So the total increase in the general fund is $334,000 or 0.9%. With the way the economy is right now, not knowing the taxable value increase, and we even saw some sales tax revenues go down last year, but we're seeing them start to go back up now this year. Total city-wise, we've cut in the last couple of weeks about 1.5 million of mostly operating out of the budget. We've cut about 900,000 out of the general fund to be able to balance it right now. So that's why it's only an increase of the 334,000 or 0.9%. These are the other funds, special revenue funds. And well, what are special revenue funds? Well, they're money that's required to be set aside in its own fund and restricted for a certain purpose. So these are all the separate special revenue funds with the budget 25, the 2026 budget, the change and the percentage change. The biggest increase was general government impact highlighted, and that's because we're doing the budget for some Dell servers for IT. And then down below that, transportation impact, $170,000 for the road program. And down in the CRA fund, we got $2.4 million increase, and that's due to the master plan for $1.9 million and Orange Street construction. Down below under capital project fund, we have increases, but it's mostly due to the capital investment fund is the fund that has the sidewalk improvement fund. It's got like a $1.7 million budget. The expense, it's used for sidewalks, but the expenses for the sidewalks are not done in that, expensed in that fund, they're expensed in the capital project fund right above it. So the increase there, that's charter approved, used in, before they were allowed to use $100,000 a year for sidewalks, the charter increased it to $300,000. This is increasing the transfer up to $300,000 to the capital project fund. If that's making any sense. Last slide on the funds here. We start with the enterprise funds. It's increasing $322,000, mainly due to the contract increase with waste management. The big increase under water and sewer is a $5.9 million for mostly the capital increase and the electrical work, the $5 million project for electrical at the wastewater treatment plant. Non-departmental mostly went up because of the increase in repairs and maintenance, property insurance, and an interfund transfer. Stormwater fund went up due to health insurance and debt service on the VACCON trucks. We don't have the debt service on the VACCON trucks. We're working with our financial advisor and bond counsel. We found that we had 2 VACCON trucks that are very old, and the cost of keeping up is outweighing the keeping them. They're 15, 20 years old. One department needed one, and the other one, really the both of them. So we reached out to our financial advisor. We could piggyback off a contract that Delray Beach did. We got a rate of 3.47% to finance these trucks over 5 years. So we got 2 VACCON trucks. They're about $600,000 each. So the debt service will be about $130,000 for each one of those. So it's not been gone before the board yet and approved yet, but that's what the
budget. What truck is it now? What is it?
VACCON truck.
What does it do?
It's a big truck that sucks.
The vacuum truck.
I think it goes out of the sewer system and they.
Yeah, it sucks the leaves out of the sewer. Okay.
I don't know if you throw it. Chief says yes.
That's what I thought. I didn't want to assume no.
So now that we have 2 new ones, all the sewers will be clean?
I would think so. They should be the cleanest sewers in town. I know, more numbers. The ones were by fund and by department, and I just thought, this is total city, but this is breaking out the line items in the budget, our different line from executive salaries, regular, other salaries, overtime. Mostly like to say that under personnel, which is going up 3.4%, it's still, I'm repeating myself, it's the police and fire union increase. And their police and fire pension contribution increase, and the 10% health insurance increase. This is showing operating line items. One of the bigger increases is other contractual, now $545,000. Majority of that is the contract with the sanitation, and there was some with water and sewer. Insurance, that's a 10% on the health, life. I'm sorry, not the health and life. This is the property insurance, but it's an estimate. We'll find out in July or August what it ends up being. Hopefully it goes down. And then the increase of $418,000 repairs and maintenance. Majority of that is increases IT and the water and sewer departments. And I think that's some of the larger amounts. What's the total increase for operating is $844,000 or 3%. Getting into capital outlay, we've got an increase of 11 million, which 1.6 million is under buildings. Most of that's a golf course clubhouse at 4.2 million. Improvements other than building, 9.8 million. That's more of the water and sewer electrical plant work they're having done at wastewater treatment plant. Debt service increase, that's due to the land financing we did in December. That's about a $680,000 a year debt service, and plus adding in the VACCON trucks. Down under transfers, that's that transfer from the capital investment fund to the capital project fund for sidewalks. Reserves and loans, the very last item, highlight $823,000, a decrease, but I don't have any money last year or this current year where we budgeted for putting money into the unassigned reserves. We didn't have that this year, so we did it last year, but I don't have that in there this year. I'm getting there. I've only got 2 slides just on the general fund. Basically the revenues again. And I highlighted $649 increase in ad valorem. Usually last year that was probably $900,000. Year before that was a $1.2 million increase. But since we got 0%, obviously we've got $649. And I think that's delinquent taxes is in that total. The other one for charges for services, increase of $570,000. That's mostly due to our EMS contract. We were able to increase one more unit that we have, which provides more funding from the county. So that was the larger amount that increased that charges for service category, along with the fire went up a little bit, but not as much as the EMS contract, thanks to the chief here. Expenditures in the general fund, well, we're hearing it again, it's personnel, and it's 1.2 million it went up, and that's the police and fire union increase and the pension contribution, and the estimate of the health insurance. And down below in the graph, as usual, general fund is mostly personnel, so 74% of the general fund is personnel expenses. 2 slides on water and sewer, just to show the revenues. Intergovernmental, that's the 2 grants, one for the electrical plant, 2 million, and the sustainability, 400,000. And then their charges for services increase of 1 million. I say that's the rates that would get imposed on the residents for the increase. The PFAS settlement of 3 million. And then down below, charges for services is the biggest category of water and sewer fund at 70%. Expenditures of the water and sewer fund, personnel operating capital, the biggest increase again is the capital with the 5.7 with the electrical plant. Total increase in the water and sewer fund is 6.2 million. And down below, the biggest increase is capital outlay at 40.5%. And I'll stop there. Next, I was going to go over some capital, but I don't know if you have any questions on the budget.
Questions, comments?
When do you anticipate the salary survey data to be in and plugged into the budget?
Well, they're working on that right now. It's still in draft form. They're analyzing, going through, making some corrections. They're working on their meeting with departments, I believe, this week, going over it with the departments, what the increases are. There's a COLA of 3%. If anybody needs adjustments, there's adjustments to the salary, and then there might be adjustments for compression. So the minimum would be the COLA of 3% in the study. I would imagine it could be complete in a couple of weeks. I know Scott's been working on it, but.
I would say we probably have it in the next 4 weeks, probably. No.
I've got a slide on that a little further down, but just a one slide, but the cost of it is like right around, which is good, that's good, it's 1.1 million total city. But it comes to like a 5% overall. So which, if you look back to what we've been giving for pay increases the last 3-4 years, we've been giving 5%, so it sort of has worked out good.
With respect to the operating expenses, you said that you kind of took out some operating expenses in the budget for this year,
Yes.
primarily because the taxable value increase you're hearing may not give us an increase, might be flat.
Right. We've gone through, and I got to thank departments too. They went through and they said, oh, maybe we can cut here and here and here.
Yeah, absolutely. I think like probably this is the time where everybody's like super busy trying to get this stuff in order. I'm sure it's a ton of work. And yeah, you guys always do an amazing job. How are you thinking about tariffs in the budget? And I ask because like some businesses are saying if 10% they could absorb in their businesses, and they might not pass that on to the consumer, but anything more than that. So there might be some passed on in some of the supplies that, how are you thinking about that, and have you?
Well, we've been thinking about, but we just tried to include that in the budget, but I don't know, we haven't seen anything directly yet, except I'm not sure if in your fire trucks or anything, but yeah.
Yeah.
So nothing has really come through yet.
So you're just kind of generally estimating what you think the impact might
Yes.
be? Okay. And do we have any sense of like where our supplies come from to a large degree, or not so much? We would just estimate.
I would have to get with those departments to find that
Yeah,
out.
Okay. All right. One other question. The supplies that we order, or the supplies we use, do they all go through procurement, or
Yes,
they all do? So if you did want to
so
look,
they'll be looking at them, yes.
they could, okay, so if you did decide to look at that, okay. I was just curious on how you were kind of thinking about that.
I had a question on, you made a comment on the COLA increase for salaries. It's 5%,
3%.
3%. What was the 5% increase that has been
In
5%?
in previous years, we've done 5% pay increases for the employees.
How many years in a row has that been?
I think it's 4 years in a row.
And this year would be 3%?
Well, the overall increase funded would be the 5%, but some people might will definitely get the 3% COLA, but some people might be getting a more of an increase based, we're having a consultant do the pay study, and they're looking at all the positions in the city, comparing them within the city, but also comparing them with other cities to see where these positions should be at.
So is it a fair statement to say that salaries have increased 25% in the last 5 years? Or at least the salary budget line?
Yeah, with the 5% a year, yeah.
Thank you.
Sure.
Let's go on the Capitol.
Ready for the next one?
Yep.
I know you all say these presentations are riveting. I'll have to get somebody else to do them sometime. We've been working on the capital improvement program and financing options. And I put together a PowerPoint. We met individually with the board members just to try to, well, let me just get into it here. City manager requested back in January, requested departments to give us their 10-year CIP and capital outlay. So back in January, they put together a list of all their CIP and capital. It ended up totaling $212 million. This is just graphically breaking it out between general government, 7.4 million, public safety, almost 73 million, physical environment, 95 million, transportation, 16 million, cultural, 21 million. I just want to mention, people sometimes say, what is physical environment? Well, the 95 million is mostly the water, sewer, stormwater, and sanitation funds that are covered by their respective, fees to the users. The other functions are covered by, we call it general government funds, and in particular, the penny fund. We also look to see if any impact funds are available to cover whatever, if it's an allowable project. Just for the penny fund, our annual revenues are 3.8 million. They increase about $100,000 a year. And Mr. Smarkos, the penny fund is one that pays for a lot of our general governmental capital. There's more expenditure demands on the penny fund. We're allowed to charge our fire vehicles and our police vehicles to the penny fund. Fire trucks have gone up in cost from $300,000 about 15 years ago. We bought one, now they're upwards of $2 million. I'm sorry, gotta pick on them. But police vehicles have gone up too. You know, to outfit them, they've been $50,000, now they're about $100,000 each. And the cost of street paving has gone up. So it reduces the funds for other availability for other capital projects. We've got some unfunded capital projects out there. Cops and Kids Building, they've talked about 4.5 million, dredging the bayou, 5 million, renovating the old Cops and Kids Building, 1.5 million, maybe renovating the EOC, 500,000. And Craig Park Seawall Construction Phase 2, that's still to be determined. We have some projects that are already cash funded, like Fire Station 70, 6 million, Craig Park Seawall Construction Phase 1, 1.6 million. It's a total project of 3.6 million. We've got a $2 million grant. The other 1.6 million is money we have in the penny fund. And then if we were to do refinancing, we financed the land dredge site in December. We could refinance that land after 18 months and pay it off at July 1st, 2026. We could pay off that debt if we desired to. Over the history, the city has maintained little or no debt issuance. The city has one of the lowest amounts of debt in the county. The ratio we use to measure the debt is usually the annual debt service to the amount of total revenues in the general governmental funds, which is about 45 million. Before the land financing, we were at 0.89%. After the land financing, we were at 1.91%. This is a survey study we put together last summer with the cities in the area going from Dunedin, Newport Richey, Bel Air, Tarpon Springs, Gulfport, Seminole, and then the average. As you can see, that's highlighted in 0.89% is Tarpon Springs. We had little governmental debt. Most of it was fire truck leases. So we had 2 fire truck leases for 5 years. One will be paid off next year, and I think we got 2 more payments on the other one. So we're at 0.89. We're the lowest in the county. So we did little or no debt. Oh, just right. And the average was a 4.51%. Also presented to the board members, you know, how the financing options out there. We've been mostly on pay-as-you-go, which limits, it limits how many projects you can do. But there's financing options, and that's usually when they say, have future generations pay for capital projects. So we presented financing options for 10 years, 15 years, and 30 years. If you go 10 years, you don't have to go to the voters for referendum. But if we go over 10 years, you have to go to the voters. So we had examples for 10 years, 15 years, 30 years. And then the different financing instruments the city can do is a bank note, where you just go out to bid to the bank, the winning bank with the lowest bid, or a combination, if you find the prepayment, a low prepayment, which we did with the land. It combined both. The interest rate was at 4.3, which is almost one of the lowest, and we could prepay it off in 18 months. The rest of them are, some are like 3, 4, and 5 years. Or you do a big bond issue, and that's a big public bond issue. And the difference is banknotes, banks usually only want to go from 5 to 15 years, but there are less issuance fees. Bond issues are more for larger projects over 15 years. It takes a little longer to get the debt proceeds. There's more issuance costs. Like if the board decided they want to go for a bond issue, they would have to probably send it to the voters in March of 2026. And from what our financial advisor says, it usually takes 6 months after that time to get the money. So March, it'd probably be September of 2026 before we got the money. In comparison to a bank note, we did the bank note, it was approved by the voters the first week of November. We had the money by the middle of December. These were the options that we went over with the board members. we had more detailed ones with each one of these separately was a separate slide with all the projects and all the years going out, 2026, 27, 28, 29. So I thought I'd just sort of summarize it here. If we did no additional projects, zero financing, obviously no term, the debt service is $677,000. Currently, that's the debt service on the land purchase that we bought. It would leave funds available of $470,000 for other projects. Well, not very much for any additional projects. And our debt to revenue ratio is 1.91%. If we decided to finance the fire station at $6 million, maybe over 10 years, our debt service would go to $1,417,000. That includes a $677,000 for the land dredge site. But we'd also have funds available of $5.7 million for other projects. The debt to revenue went to 3.1%. Next one down, if we decided to finance the fire station 70 and the Cops and Kids building, $10.5 million, 10 years, the debt service would be $1.9 million annually. But we'd have $5.7 million for money for other future projects, and debt to revenue ratio went up 4.75%. And then keep going further, if we refinance, this would be a 15-year term, so we refinance the land debt, finance Fire Station 70, the Cops and Kids building, and throwing in Craig Park Phase 1, the $1.6 million, which would bring that cash back into the penny fund. Our debt service would be $1.5 million, funds available for future projects $7.9 million, and our debt to revenue ratio would be 3.36%. And lastly, the big bond issue for $30 million. Basically, same project as the one above it, but adding in Bayou dredging for $5 million, $22 million financing, 30 years, debt service be 1.3, almost 1.4 million. We'd still have money available for the future projects of $7.9 million, and the debt to revenue would be 2.96%. So those are the options that we were playing with and showing the board members.
So just so I understand, excuse me, the funds available for projects column is money that's going back into that penny fund?
Yes, if we did.
Would not be spent on these projects because they're being financed?
Right.
Okay.
Yeah, it would have, after those projects would already be paid for by the financing, and it would relieve some money,
right,
funds available for projects.
I got it.
And it's mostly, the good portion is that because Station 70 is already cash funded for $6 million. If we decide to finance it, it's freeing up that money for future projects. Some other projects we were talking about, Beckett Bridge utility lines that the county still hasn't, that seems like this has been going on forever, but I don't know if you know, Mr. Smarkles, but the Beckett Bridge, the county is going to replace that bridge. It's been going on for a while. We have utility lines underneath the bridge, the water and sewer lines. Before they can work on the bridge, we have to meet their city water and utility lines. It's a county bridge. We have to move our water and sewer lines from underneath the bridge. It's a cost about $4 million. But the county is trying to get a grant to pay for their bridge, which would also include moving those utility lines. So we're hoping the county will get the grant. They've been turned down a couple of times already, but this will be the third try. Stormwater action plan, they're trying to fund some projects for 10 years for $4.5 million, and then the golf course clubhouse at $4.1 million. That's mostly capital. I just threw this slide in about the pay study just to tell you about that. The total cost of the pay study is $1.1 million. The general fund portion is $600,000. The COLA, the minimum is 3%. And then some positions will have adjustments over the COLA. The overall increase comes to 5%. And I think that's all I got. Oh, just the meeting schedule there, Finn.
Okay, couple things about the meeting schedule. When are we going to have the breakdown of which departments fall on which of these dates?
Well,
if I don't get them till Wednesday, I'm out of town Wednesday, I'm not going to be ready for the meeting next Thursday. So I need to know what departments are.
When are you going out of town?
I'll be out of town on Wednesday, the day before the meeting. So if I don't know the departments till Wednesday, there's no way I'm going to prepare.
Sherry's been reaching out to them today, and I think she's got them almost all set up.
Okay. The sooner as we know, the better.
I would think, I don't want to put you on the spot with this Friday, maybe? or- Okay.
The last meeting, we talked about these dates for the 3 meetings coming up. And I had indicated to the committee members at that time, I was tentatively going to be out of town on the 29th. That's no longer happening. I'll be here on the 29th. And for Mr. San Marcos's benefit, what these meetings are about, back here, the city manager met with the department. Over those 3 meetings, the department heads will come in and present their budgets for us to review and make questions and concerns about. So that's what will happen over the next 3 meetings.
See if Mr. Smarkus can be it.
Well, then hopefully, we might be able to do it in the 2, last year we did it in the 2
We got it
meeting.
done in 2, so,
Okay.
but.
In case we've got the
in
third one
case
set aside.
We have the 3rd one scheduled in case, yes.
All right, keep our fingers crossed.
Any other questions, comments?
And don't worry, Mr. Smart, you won't be busy through all the way through September and stuff. It's mostly these 2 or 3 weeks. And then maybe after that, there's maybe 1 meeting a month, maybe to go over the budget and update you.
As the budget gets updated, we meet once a month to review that.
I don't know if we would have a meeting in June, or maybe sometimes we wait until after we'll get the next budget book together, probably about the 1st of July. I'm not sure if your next meeting after the department meetings might be in July, but whatever you prefer.
We'll see where we're at
Yeah.
that time.
All right, thank
Any other thing on the upcoming budget stuff? All right, thank you, Ron. Any public comments? Okay, board and staff comments. I'm going to lead off. As I had indicated before, I got invited to attend the April 22nd meeting of the Board of Commissioners. They had declared April Volunteer Month. They had all the chairs of all the volunteer committees come in. They read the proclamation and presented this, which I need to share with the rest of the committee members because it's not just mine. Any other board and staff comments? Any future agenda items besides the item we tabled from today? Seeing none, we will adjourn at 2:57. Thank you all.